Good afternoon, you trader nerds. Welcome in to the Sweet Bobby, whatever. Glad to be with you today. Feeling much better than yesterday. Thank y'all. So let's see how our little accounts are doing, shall we? Shall we? Listen over here. Oh man, they logged me out. Come on, y'all. And I don't think I can play the Jeffersons today because if I play it, it's only going to be me that can hear it. And what fun is that? We can't hide it if we can't share it all together. So we are at, in this little account, we are 37, 8, 20, 45. Let me get the right spreadsheet. 37. 37, 8, 22.32. We are up $129. Praise the Lord. I'm gonna try to play Jefferson's. Well, we're moving on now. I'm the only one who hears that. Y'all hear that? To the side, to a deluxe apartment in the sky. Oh, y'all hear that? Wonder why? It's like the Lord shined down upon me and said, Bobby, I see your struggle. I'm going to reward you by letting me play the Jeffersons. I love that. Okay, good. Glad that worked. So let's now record our little Greekies. Greeky. All right. So our Greeks are 3 delta, 18 theta, 318. It's almost 316. All right, 318 is my Greeks and ratios. 318. Oh, and I got a new camera coming too. I'm really excited about that. You know, business people have to make all of their purchases in December. So Uncle Sam won't rip us blind. So I was like, I got to invest in some new equipment. Trying to keep the man off my back. All right, our buying pair is, and I think I've got the best practice of our triple nipple donkey too. If this is your first time, you never heard the word triple nipple donkey, you're going to hear it quite a lot. So our buying power is 52, 83, 28, 52, 83, 28, 52, 83, 28, 52, 83.28. Okay, so what shall we do? Well, I say we put on a new trade because I'm blue Christmas over here. All right, we're low on our blah, blah, blah. We're delta neutral, everything was fine. So we know the shenanigans that you and I have to go through. We got to put on a trade. I hadn't even looked at the market direction. I don't care. Market direction does not bother me. So let's trade. Give me S. Oh, not Muse. Crap is Muse. Trade on the table. Then we're going to go to, what do we say? We got to get at least 60 days on our put debit spreads. Trying to remember the rules. Long put vertical. And we're going to move that down where we're going to pay $10 for it. The reason I can do my tongue like that so good is because I play trumpet. So I'm pretty good at that. All right, 975, bump that up to 10. See if we get finished. I said bump that up to 10. Let's try to go this way. It's moving around. My price is moving around. Now we'll move that up to 10 and feel me, baby. Feel me, baby. There we go. Now we got to complete the thingamajiggy by going out to the closest to 90. You don't worry about going over or under here. On the 91, we're going to sell the 12 delta or 12% probability money, which is what I prefer. So I like to be aggressive because I'm an aggressive son of a gun. So I'm going to trail the highest 12% probability in the money. Going to get myself about 28.50. I said, unbelievable. Unbelievable. 28.25. Come on, feel me. That should feel. There we go. We're in. Ta-da! It's just magic, y'all. 3 button monkeys can do that. Right? That is not hard. Now, Should I even tell you what I think the best practices is of the Sweet Bobby hedge? I think the Sweet Bobby hedge, Ed and I spent some time last night going through it. I do not think we can do a 1-2 and be strong enough to the downside. I think we have to do a 2-4. Now, the good part is, once you do a 2-4 Sweet Bobby hedge, you can only do one and be protected. But then I got to thinking, well, what is the harm of doing it a second time? So on the second time down the mountain on the 3-nipple donkey, you could do no Sweet Bobby hedge the second time down the mountain, or you could do a 1-2, or you could do a 2-4, depending on your preference. And I just started thinking this morning while I was lying in bed, counting my toes. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, sometimes I wake up and I go, wait, I'm missing a toe. And it just makes me feel funny. So I was counting my toes this morning. And I was sitting there thinking, well, why would you not do a 2-4, Bobby? If you can put it on for credit, and it should leave you with about $15 of profit. I think Ed and I figured out. So an extra $15 for a little extra protection. Yeah, I'm good on it. That's after commissions, by the way. All right. So what are we doing? Oh yeah, going to the other account. Sweet Bobby spreadsheet. Here we go. So today, here's the new spreadsheet, y'all. This has got all the bells and whistles. Let's see what we're doing over here. So over here, we are at NetLit first, dummy. 28,072. I'll take that. 28,072. Y'all know that's a Jefferson. 27,082. Praise the Lord that giveth from above.
Well, we're moving on now. We're moving on up to the east side. To a deluxe apartment in the sky.
28,002. Wasn't that right? Now I'm doubting myself. 28, yeah, 28. Okay, so that's good. It's moving around a lot. All right, let's record our Greekies over here. Don't include anything on this other thing because it says we've got positive buying power. No. That's a false illusion. Only do it on your options positions. Don't do it on your T-bills. So we're at 18, say 19 and 26. 19 and 26. $19, $26, and our theta percentage is, our, what do you call it, percentage is 7274, 7274. Okay. So we are blue here, we're fine here, and we're fine here. Put on a trade, dummy. Let's do it. Come on, monkey, hit 3 buttons. So what we're going to do, we're going to do the same thing we did in the other account. We're going to get the same little strikes. We're going to do the same little thing. We're just broken records, y'all. So we're going to go closest. We're going to go closest to 60 without going under. I need 60 days on my put debit spread. And my put debit spread was a 36.10, 35.60. 36.10, 35.60. $36.10, 35.60 for $10. Oh, Bob, you got to hold that control key down, kid. Come on, kid. You've been here before. This ain't your first time. It's gonna make me pay up a quarter, ain't it? Yeah. Oh man, let me try that secret stuff, that book I've been reading. I'm open to only good things happening to me. My name is Bobby. You only have 9 toes, but you are sweet. Nothing. See, I knew it was junk. I'm not reading that book. I'm gonna throw it in the trash. All right, here we go. Let's go up to 10 and a quarter. And we're in. So let's go sell our naked at closest to 90 days. Doesn't matter if you're over or under. And we're sold the 33.80. Sell that little puppy. Okay, so why don't we experiment with doing our 2-4, right? You want to, our 2-4? So how are we going to do the 2-4? Well, to do the 2-4, what we're going to do, kids, is we're going to sell 2 more of these. What? Yeah. Do you got to sell the same strike? No. But I'm going to sell 2 more of these. Okay. So we're going to sell the 33.80s, and then we'll sell 2 more. Nobody get scared. I'm here to hold your hand. We'll sell 2 of these. Oh my gosh, Bobby, you taking some dramatic risk here, maybe. Nab it. Cancel, replace. Now, Sweet Bobby Hedge is so easy, y'all, right? Sweet Bobby Hedge now says, okay, Tubs, you sold 2 of the 33.80s. So now I got to go 50 points below that and buy some 33.50s. Okay, how many 33.50s? 4. Where are you going to buy those at? Well, I'm actually going to buy those at the closest to 60 days, right? Because I need 30 days here. I need 30 days. Because what's this? If I sell the 72s at 33.50, it's going to end up being a debit trade. 33.50. If I buy 4 of those.
Shouldn't those be 33.30s?
Yeah, is that what I said? 33. Oh, 33. Let me see what I did. That's a good question. Thank y'all. 33.80, 33.30. Yeah, 33.30. Good. I'm on the wrong track. 33.30. So if I buy 4 of these, how much would that cost? The 33.30s in the 72-day cycle would cost me $390. Okay. How much credit did I get from the sale of these 2? We got 282. See what I'm saying? I can't sell those, or I'm going to be paying a big old nasty debit. Now your hedge would be stronger, but that ain't the game I'm in. So I got to get 4 33.30s in that 55-day arena. And what's this? 55 days by 4 of the 33.30s. And then we're going to show it what it looks like on the risk graph, right? 33.30s. All right, here we go. All right, so there's my 33.30. Got to buy 4 of those. See, I can do that for $210, a net credit for both trades. Here we go. Let's do our 33.30. Boom. In. That's Sweet Bobby Hedge. Ta-da! Now let's see what Sweet Bobby Hedge looks like, shall we? With the 111s that we did today. This will be cool. Let me go to my Analyze tab. Let me get rid of all my junk over here, so we can see what this puppy looks like. And hide positions, show simulations. And we'll delete all these, so we'll only have good and new stuff. There we go. So let's simulate all these trades. Buying the 4. Selling the 2. Selling the 1. And buying the put debit spread. All righty, kids. Let's see what this looks like. Got to change that to /MES. I said, got to change that. So, what does the 111 look like by its little lonesome? Well, let's see. The 111 by its little lonesome looks like this. It's just a naked put and a put debit spread, the ostrich, or whatever it looks like. All right, so the ostrich by himself looks like this. There he is, Miss America. So you say, man, it sure looks good, Bobby. But if we go down 20% here, little pal, I'm down $1,300 today. Oh, be still my heart. No, actually, friend, it's worse than that. If we put the vol in there, you're gonna be more down than that. You're gonna be down $2,500. Well, Bobby, that ain't good. Yeah, tell me about it. All right. So what we decided to do is put in a sweet Bobby hedge. Now notice it's taking $600 of buying power on my 111. Keep that in mind. So now let's put in our 2-4. Cha-ching, that made it worse. Cha-ching, that made it better. So the combined trade takes $274 of buying power. Oh, be still. Bobby's got negative theta. I know. Y'all hang on. It's got negative vega. I know. Positive vega would be better. And it's got just a little bit of long delta. So what does this puppy look like? So I'm only interested on a crash here. You say, Bobby, you're underwater over here. Yeah, but volatility doesn't explode over here. Don't worry about this. You need to worry about your 12 and 20% positions to the downside. So let's see what they look like. Now, if it crashes today, y'all, I sit there and say, who cares? I'm going to be up $880 to $930. Crash, baby, crash. Yeah, but Bobby, what about valleys of death and all that? I got it. I got it. I think we know how to manage valleys of death. So what are we going to do? We're going to close our shorts of the Black Swan hedge as soon as, or on the day that our long 4 puts expire. And the spreadsheet is now designed to tell you what day that is. And it'll even make it yellow for you. So you don't have to go into a lot of extra management and go, I don't know what to do with this. You're going to be just fine. Now, our naked put of the 111, when are we closing it? After 30 days. After 30 days, that puppy is gone. Then you're going to do what next after 30 days? You're going to sell another naked put, no put debit spread this time. Then we're going to, maybe if you don't want to put on another sweet Bobby hedge, I don't think you have to. Maybe you say, hey, I'll split the baby. I'll just do a 1-2 sweet Bobby hedge. Or heck, if you're a greedy capitalist like me, you'll do another 2-4 in 30 days. So actually you'll be doing a 3-4 in 30 days, right? Because this is what it looks like. It's really, really good. Now let's look at it with just one expiration, see if anybody freaks out over something here. Expiration. Bobby. You got a $1,500 valley of death. Okay. Where does the valley of death occur? Well, it occurs after the market goes down 12%. Right? So yeah, we got a valley of death here. How does it work over time? Well, let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 30. Well, that doesn't look too bad, right? So we got 25 more days. So if it hadn't gone down in a crash there, you sit there and go, well, if it happened today, if the market went down 12%, I'm down $375. Now, remember, we did the long puts at 55 days. So we've got, we got 25 more days on those. So we'll see how bad it could get here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. Okay. That gets kind of ugly, doesn't it? Right, that kind of gets ugly. You could be down $1,400 on a 12% move down. Okay. But at this point, what would a 12% move down look like without the hedge? All right, let's look at it. What would a 12% move down in a single day look like without the hedge? So we take the hedge off. Let's just see. 12% move down, take the 2-4 off. So we got that and that. So 12% move down now is you're down $1,000. $1,077 if it happened on today. What are you with the hedge on? $1,075. Everybody with me? $1,075 compared to $1,083. Huh. So even though it looks worse, the graph looks worse with the 2-4, it's not as bad if it happens on that day. That's the day we're taking these things off. 1,078. $1,075. I'd rather have the hedge to the downside. Because if it goes screaming past this, swing, swing, baby, swing, we start to be up money again. Everybody with me? So you sit there, dang, Bobby, we got a valley of death. You would have had that same valley of death anyway. Except it would have been worse. Because otherwise, what would have happened if we keep going down? Down, down, down on the burning ring of fire. It just gets worse and worse. On the hedge version, it starts going up, 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 up. Now that ought to make you feel good about putting your little sweet Bobby hedge in. Questions? Comments? Have the cliff of death. Yeah, we could call that the cliff of death. Look, all you going over a cliff. I don't know about you. I'd rather have the valley of death. I know if we go past that, hey, baby, we're going to the good side. So y'all see how it all works together now? So here's what I believe the best practice to be. The best practice is going to be this. Every time you sell the naked put of a 1-1-1, I would say enter a 2-4 the first time on the mountain down. Second time, you don't have to enter one if you don't want to. But if you want to say, you know, let me just enter a 1-2, that's fine. So your best practice may be I'm going to do a 2-4, then a 1-2. I think my best practice is I'm just going to keep it easy. I'm going to go to 2-4 every time I sell a 1-1, the naked put of a 1-1-1. So for every donkey going down twice down the mountain, I'm going to do my 2-4 2 times. So that I drew a good picture for Ed last night. Let's see. See if I can draw a picture, get y'all a little picture here. So I can use my Huion drawing tablet that I've got that I always draw on. Let's see what this looks like. All right, so here's what your campaign looks like. Our do we get rid of the first 2-4 if we want a new sweet Bobby hedge on the second trip? No. Those 4 puts, Paul, are made to go to expiration. So those are made to take you into the expiration unless you need to close it. How will you know when you need to close it? When you got the Ucho Muno. You'll know it when your account's up $2,000 in a day. You better close some of them, right? So you're getting a new 2-4. So you will have 2 2-4s kind of going on at the same time. Ooh. And don't let it overcomplicate you, y'all, because here, let's just see what it looks like. All right, here's what we're doing. So I'm going to start the triple nipple donkey. How does the triple nipple donkey start? It starts with a 1, 1, 1. Simultaneously with a 2-4 sweet Bobby hedge. Everybody with me? What happens in 30 days? In 30 days, you're going to close the naked put of the 1-1-1. What do you do to the sweet Bobby hedge? To the sweet Bobby hedge, you don't do nothing. You don't do nothing. Now, you close him, so here you're gonna sell another naked put, sell one naked put at the end of 30 days. You close one, you open one. So now let's go down here, another 30 days. And see it. We're gonna go another 30 days and just see what we do. So we go another 30 days. Oh, and when we sell the one naked put, you're also doing a 2-4 Sweet Bobby hedge. I forgot that. You're doing this after 30 days. Now we travel down another 30 days and we're going to close the one naked put. By the end of 60 days, your put debit spread is gone. PDS expired. Your Sweet Bobby hedge puts expire. And we're also closing the 2 naked puts of the Sweet Bobby hedge. Isn't that groovy? So out of 30 days, you sell a naked put. We go to 60 days, we're going to close that naked put. Our put debit spread expires. Our Sweet Bobby hedge puts expire, long puts expire, so you got to close the 2 nakeds. So what are you left with now? Yes, Mark, you do a 2-4 every time you do a 1-1-1, but you also do it on the second leg down where you're only just selling the put. Remember, the second time down the mountain, when our donkey climbs down the mountain, we got to sell just one naked put. You don't add the put debit spread, but we're also doing the, so anytime, what you need to say is anytime that we're selling the naked put, we're putting on a 2-4 Sweet Bobby hedge. So now what do you got on after 30 days? Well, let's see. You got on nothing but this is a 30-day-old Sweet Bobby hedge. And your long puts have 30 days to expiry. Your naked 2 has 60 days to expiry. So you've got a Sweet Bobby hedge with nothing. Dang, y'all. I mean, I think we might do another naked put with Sweet Bobby hedge. We may could go down the donkey 3 times, take our donkey down the cliff 3 times. So in fact, couldn't you? Don't you think you could? Don't you think you could now sell one naked put again? Because we got 30 days on our loans. So at the end of 30 days, what do? You close the naked put. These will expire, and you got to close your shorts. So the naked puts close, plus your long puts expire. Boom, baby. You walked that dog 3 times. The only thing we don't have this last trip down is the put debit spread. You know what? You could probably put in a put debit spread on that second trip down. So Trey and I are going to do some analysis work today in his session. So hopefully we'll come out and figure this all out. But I know what you're saying. Bobby, you have complicated a very, very simple 1-1-1. Okay. But I'm telling you, once you run through this a couple of times, you're going to be okay. You're going to be just fine. You're going to be excited. You're going to be happy. You're going to be all kinds of stuff. So don't get upset. I know it looks hard. But y'all, you have something that nobody else has. You have a spreadsheet that will tell you, right? What's this? What happens if my short puts get to 0 days, right? Watch what happens. You ready? And you say, how come, what if I don't notice it, Bobby? Oh my gosh, I missed it. What happens? If that gets down to 0 day, you got a little signal over here that says, oh, hell, you don't have a signal over here that says close. What's this? Hold on. F4, blah, 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 blah. F4, J4. Naked close. If and or F4 equals short hedge. Hold on. Put short hedge on here. All right, I got to fix my formula. K5. I bet it's here. Let's say no. If this gets to, I'll fix it. We had it fixed yesterday. I don't know what happened when I copied everything. Let me just look quickly. If J4 and F4 is naked. Oh, okay. If close, if and F4 equals short hedge. K5 is less than or equal to 0. K5 is equal to less than 0. Close. Oh, that's right. Hold on. I think I got it on the wrong thing though. Yeah, that would say close. That should be wrong though. This should tell us to close the shorts. No, that's right. If our longs, yeah, if our long puts are 0, okay, I'm so weird. Hold on, that's right. If our long puts get to 0 days, right? And we go, man, we got to close them. So we've still got 16 days in. So we don't have to worry about closing this yet, right? Because it's still got 44 days in it. But if this thing gets to 0, we get to close signal. If our longs get to 0, we get to close. There we go. See how I built that in? Now watch this, little friend, little friend. What if your naked puts, right? Yeah, you say, how am I going to know when to close them? Well, you're going to know to close them when we get 30 days into the trade. How does it know, Bobby? I don't know. It just knows. It knows to close them when your nakeds get to 30. Isn't that wild? So now all you got to do is look down this little column here and you're going to know whether to close something or not. How about that? Who designed that? I mean, you know, if anybody wanted to nominate me for a Nobel Peace Prize or something for economics, that'd be great. So now the spreadsheet tells you everything. So now you got to say, what if I don't want to record my trades in spreadsheet? Well, if that's the case, you might want to at least record your hedges, your Sweet Bobby hedges to kind of keep up with that, right? Good. Questions? If not, I'll see you tomorrow.